so hold it down over there. We'll be back up in just a second. And going on. Hello everybody, welcome to the TraderMerlin Show. It is your Monday edition. Happy Monday out there, and for all the silver holders that are in our group today, I know we've got quite a few. Brendan probably is not even going to join us today because he's so excited about his silver, and if I remember correctly, you had some long-term calls, if I'm not mistaken, on silver, so good for you guys. You're benefiting from the hoopla that is the retail army thinking that they now dominate the world. So we'll talk more about that today as we progress. We are going to talk about a lot of different things, obviously. Certainly we'll go into what's happening in current market. But we had some questions about some of the traps last week. And I mentioned, we talked about short squeeze, which of course is one of the classic traps out there. And of course, hedge funds like Melvin and Citron got burned last week on it. But rest assured, they'll make all that money up times 10 in the next 6 months as they start shorting at much higher prices on companies like Gamestop. That brought up a question about what are some of the different traps out there? So that's the topic du jour, is trading traps. Today we're joined with none other than the lovely and talented Tillie Allison-Harris. Tillie, how you doing?
Great, Marley. Glad to be here. Hi, everyone.
Look at you in mission control over there. I love it. Well,
today I'm working from home, and I love going to the office because they have a better camera there. So you guys, this is what we got.
Well, it looks good. And I have screen envy because at home I only trade with 3 monitors, so you had to one-up me with your quad monitor setup. I love it.
No, you haven't seen the other side of the room yet.
Oh, no. What do you got, like a S6 over there?
Got a few other computers, yeah.
Oh, great. Well, for those that don't know, Tillie is, in a non-offensive way, she's an absolute nerd for the market. She loves it, and she's very studious. So we'll dive into her loves of trading today. Tillie, let's talk about traps in the marketplace. I already covered pretty in-depth last week. Of course, if viewers want to know more, you can send in questions and we'll clarify it. But we talked about short squeeze, which is one of the classic market traps out there. A lot of talk about how the retail trader is now dominating the marketplace, and we'll get to that. But talk to me about some of the other traps that you like to look for or things to pay attention to with regards to trading traps.
Well, I love breakouts. I know breakouts are real popular, but I try to think of it a little different way. So whenever there is a big breakout, looking for opportunity to buy, but, trying to avoid some of the most common, things that happen is we all kind of get wrapped up in, hey, FOMO,
yeah.
Fear of missing out, and wanting to kind of jump on it when it is breaking out rather than waiting for a pullback or identifying where would an area be to buy in that would be, possibly not, because getting whacked at the high is no fun.
Mm-hmm. Yeah, I mean, and I think probably the two that come to mind are the classic bull trap and bear trap, right? Those are like the ones that are textbook kind of basic. And I'll explain the bull trap for everybody. Basically, what you're looking at with the bull trap is prices moving up, whether it hits some supply level, maybe just bouncing along that. And as it rips through this area of supply, it brings in a whole bunch of new investors or new buyers, which theoretically should spike it up. And then there's also a belief system that there's institutions that are setting that up. They're planning on that happening. As soon as it breaks through and the retail buyers jump in, then they sell aggressively and push it right back down. That's a bull trap. A bear trap is the exact opposite, where it's sitting in demand or it looks like it's about to go lower, and you'll see big money come in and push it lower before it rips back up. Now, with both of those, I don't think that there's nothing that you can really do to say, oh, I know this is a bull trap or a bear trap. I think you just kind of, you're expecting it to happen, and if it does, great, you just get out and take a small loss. But you always want to have that in the back of your mind that these are a bull trap or a bear trap when you're looking at things like breakout trades. So I want to throw those two in the mix. Tillie, you talked to me before the show about other traps with regards to like liquidity and leverage, etc. How does that factor in for you?
Yeah, I've got a lot of questions on how to use leverage and margin correctly. And, it's such a big deal because all of a sudden when someone opens a trading account, they have free money available. So now imagine, every $100 turns into $1,000 or $10,000, and people can find themselves in a really, really hot spot, all of a sudden trading with really large share size. And whenever they're buying, oftentimes not realizing the downside. So I was talking to my husband about this, and it's really cool because he always tells me he's only going to risk set amount of dollars, which means that he's already calculated in advance if the stock should decline literally down to zero. He knows his bottom line. because he's a real value investor and he's looking for stocks that have the potential to appreciate, but are really like bargain basement. He does a lot of research on companies that are being bought out, restructuring, things like that. So most people don't really think about the risk of the trade. And all of a sudden now opening up an account to trade with leverage and you've got like 10 to 1, 100 to 1. So I kind of wanted to take a poll and find out how many of you guys started trading with leverage, without leverage. How did that work out? What did you learn from it?
Well, you got a lot of questions in there. I mean, I think if you're trading at all, you all had leverage, right? If you're trading the stock market, you have 2 to 1 overnight. If you're trading the equity markets with more than 25,000, you have 4 to 1. If you're trading options and futures, you're looking 10-ish to 1. With Forex in the U.S., you're looking at 50 to 1, and internationally, you have much higher than that. And of course, there's other things that you could trade with higher leverage, but leverage is kind of this double-edged sword out there, which I think gets a lot of people into trouble. And I'll run this idea past you, Tillie, and see what you think. We talked about short squeeze, bull trap, bear trap, liquidity traps, etc. One of the ones I think that is overwhelming right now, and I think it's going to come back and bite the retail investor big time, is the overconfidence trap. And let me set the stage for this. I think we're in a situation right now where the media has now said things like, oh, well, the retail investor is taking it to Wall Street. The retail investor now has the upper hand. The retail investor now has more power and is going to move these markets. If you believe that, it's total BS. There's no freaking way that the retail investor is going to outsmart, outwit, or crush Wall Street. It's just not going to happen. So you start hearing about how these Robinhood traders have been buying GameStop and AMC, and now it's Dogecoin and Ripple, and then today or over the weekend it was silver. They're like, oh, we're sticking it to the man. Here's what you got to think about if you're believing that hype. If I'm JP Morgan, Goldman Sachs, any big institution, I now have someone sitting in Wall Street Bet's room watching to see what they're talking about. And as they say, hey, let's pump silver up today as an excuse or an example, as an institution, I'm taking all of my sell orders out of the market book. I will no longer be selling in the market. I will, but at a much higher price. Why? Because I know that the retail investor is so overconfident, so ego-driven that they think we're going to make a difference, and price shoots up like it did in silver today. If I'm an institution, I jack my selling price way up, and as these retailers bid it up, I'll sell at some point and push it back down to where it should be, but who's left holding the bag is an overconfident retail investor. And to me, right now, Tillie, that's probably the biggest danger I see in our marketplace right now is what I'm going to call the retail investor trap of overconfidence. Am I overstating it? No?
No, you're not overstating it at all, Merlin. So that's exactly what I was, really trying to wrap my head around. When I was listening to the news, I thought, am I actually believing what I'm hearing?
Yeah.
Because we all know that retail investors, mere mortals, if you will, all the contributions and all the money flow coming into the market make up about not even 10% of the total capital. We're talking about multi-trillions of dollars.
Yeah.
So I see this as a prime opportunity for the big players out there to be able to get to the forefront and actually maybe push for some regulation to prevent retail traders from actively trading. So we all know that it's a great privilege to be able to log in from anywhere around the world, be able to trade ETFs, stocks, futures with options. I mean, it's an amazing, amazing opportunity. And now all of a sudden on the forefront is this quote, army, if you will, which now is going to bring to the forefront some investigations. And Robinhood and others, I believe, have already been in a little bit of investigation. Mm-hmm. And it wouldn't be surprising at all if there was some more attention on the legality, if you will, of allowing, retail traders to trade. And it is a public market, but, for the Securities Exchange Commission to step in and now investigate this and for them to claim that it's a disruption to the system, there's few things in the stock market that are regulated, and that is the systemic nature and the stability of the market. So if someone out there is trying to prove that retail traders are causing the market to be unstable, they could very well push for something to prevent that.
Yeah, and this is something I mentioned last week, is I think that what we'll see coming in the next weeks or two will be some restrictions on what can and can't be shorted, rules with regards to account size, etc. And, people are up in arms about what Robinhood did. To be honest, they did what they needed to do. They had to do that to save themselves because they're self-clearing, and that was... They could have imploded and completely destroyed themselves because they're no longer clearing through the firm. They're doing self-clearing. The other side of it is they're protecting their customers. So to me, this overconfidence trap is a very, very dangerous one. There's a comment from News here. It says, that sounds like if you play careful, you can buy these stocks and take profits early. I'm not saying there's no opportunity. There's tremendous opportunity in these pump and dump, really is what it is, moves from these Reddit groups. What you got to do, though, is at a certain point, you have to remove your emotions from the equation and say, do I really want to own GameStop at $3.50, a company that's going bankrupt at some point in the next 5 years, a company that was trading at $20 a week ago and was heavily shorted, 138% heavily short? If all of a sudden it's trading at $400, you think that Citron and Melvin don't want to be shorting it again at a much higher price? Yeah. Chipping away, jumping on these things, taking a little bit of capital, and then pulling out right away, yes, that's the smart move. But people who are holding GameStop and AMC and these companies that we mentioned last week, they're going to get holding that bag. And that, to me, the biggest trap right now is that overconfidence trap. Coach says, it's possible if the 8 million members of Wall Street Bets are in a locked room and no one knows what their next step. Correct. But I'm telling you, Citron, Melvin Capital, JP Morgan, Goldman Sachs, Merrill Lynch all have somebody now sitting in that chat room. I guarantee it. I want to sit in that chat room to see what they're talking about.
Yeah. Hey, you guys, more importantly, they've got someone at the exchange that knows exactly how much money flow is coming in from Robinhood, and they're on the other side, and that's just the way that Wall Street works. So one thing that everyone needs to recognize, and when those order flow comes in from any broker, the exchange data is available to big companies.
Yeah.
And they have crazy smart software, and everyone's ever heard of a Bloomberg terminal. The Bloomberg terminals reveal how much order flow is out there. And if someone can pay, $40,000 a month for that data, they very well know how much order flow is coming in. So all this hype out there, we know that the media is used to bring something to the attention of, for a reason. So I'm kind of excited to see what the end result is. And if there's any change to retail trading requirements, if they kind of stricten, if you will, some of the requirements.
Yep. Absolutely. Hey, Don, good to see you with us here today. Don says, I bet it's just algo scanning keywords. It probably is, but, excuse me, if I was one of these institutions, I would have it more manual. And not only would I do that, but you know how if you look at the financial world, guys, one of the traps is listening to upgrades and downgrades, right? That's institutions telling you, well, we think this company is going to be doing great and you should buy it. They're usually the ones selling. I've taken screenshots of level 2 where a prestigious market maker will say, we're upgrading the stock, and all I catch them doing the next day is simply selling all day long. So that's another market trap. If it was me, I would be utilizing Wall Street Bets, right? I'd have a department inside of my firm if I'm big like JP Morgan or Goldman Sachs, and I would have them as just, you're just going to be random people in the room pumping different securities that I need for the company to sell, right? You go ahead and do a short squeeze on this stock because I got to sell some of it. Great. I'm going to be utilizing this stuff. So one of the things that I learned early on back in the 90s when I really started actively, heavily trading is at its finest, it's exploiting an inefficiency in the marketplace. It's finding something that nobody else is looking at. That's your goose that lays the golden egg. They found it. That exploitation of the short squeeze will last less than a month. It will be gone. It's already out in the market. Institutions know it. Trust me, that is a ship that has sailed. You will have some pump and dump because of Wall Street Bets' size, but institutions are watching it, and they're going to now be playing that too. So, Tillie, let's go to the overall markets. I know you were doing the weekly outlook, which we've done one. Now we're doing one every 2 weeks. What's your take on what's going on in the markets right now? We had a pretty impressive day today. I know we could probably look at the commodity side of things, but I know you love looking at the S&P 500. So let's start there. What's your thoughts on the S&P 500?
Yeah. So the reason I went back to biweekly analysis is because if you guys take a look, whenever the last chart analysis was done, last week's low on the 25th was accumulation area. This week's low, today's Monday, so Friday's low was close to 369 a share, and we're rallying off of that. I think we traded up to 375, 376 today on the S&P 500. So I'm anticipating that we'll continue to trade at these all-time highs. And the biggest takeaway, if anyone's doing more active investing like I do, I love to short-term trade. But if I don't have my perspective for the long-term analysis, and I'm really looking for really long-term outlook and kind of keeping an eye on things, if we're not expecting any real market turbulence until interest rates rise, so all the people out there with all the money, the Fed, and all the big banks have clearly stated that without inflation, there will be no rise in interest rates. So we can always have a flash crash. We can always have a sudden short sell or anything to cause the market to drop 2, 5, 10%, possibly even 20% like a flash crash or a COVID crisis. But all in all, if we're looking for the market to maintain its bullishness, which for me is real important to every investor, active trader, just keeping an eye out, looking for anything that would trigger anything other than a short circuit breaker. But all in all, everything is very bullish. We're likely traded back up towards retesting the all-time highs. Although there is a lot of sideways trading on that daily chart there, Merlin.
Yeah, I'm drawing on a daily chart right now. Just because you mentioned 20%, I was doing a line from roughly 20% from where we are right now. But people may be asking, why 20%? Well, if you look at the way the markets work, generally 20% is viewed as that definition of a bear market. So I'm kind of just toying with that to see if we do, what might that look like? You're right. Where is that 20% line? So that is going to be roughly pretty darn close to. Let me get a line drawn on that one. You're looking at an S&P at around 3,080, right? 308 for SPY would be that point. Now that's about 70 points lower than where we're at today, but that would equate to a 20% decline in the market, which wouldn't be that, I don't think would be that big of a deal. 20% drop overall in the market, would be what's deemed a bear market if you go past that. But I don't think we're going to get there. If you look at where we're at right now, I kind of agree with Tillie's sentiment until something else moves this market lower. You've got a situation where it's higher highs, higher lows. And we've come back down towards an area of demand on that S&P. I've got it on the daily here. I think you're probably right. We'll probably challenge those highs. That said, if we get below this line, a close below this line I've got on the screen here, guys, which SPY is 368.12, then all of a sudden my opinion is going to change here, and I'm going to be looking more for the short guns and get back in a short position.
Yeah, absolutely. And what I love is the correlation between individual stocks. So a lot of people bought those breakouts recently. Last week, it was just like crazy. And so for the market to cycle last week, and now some of those stocks are a little bit slower, in this market outlook, for those that are trading those individual stocks and waiting for them to cycle, this is just reassuring that although they may have picked, a stock that happened to rally to a bunch of supply, that overall in the long term, we look for more appreciation in all those markets.
Mm-hmm. No, it's I think overall that's the general tone. I mean, unless something breaks it and gives us some confirmation that trend is no longer the upside, you just got to look to be buying these dips. What other things out there in the market are exciting you right now? Got any specific stocks, setups? What do you like?
So I've been doing more analysis on individual stocks, but to be honest, you guys, I love the S&P 500. Call me boring. That's just what I use in my long-term investing. I have you guys are going to laugh at me. I have a large allocation into fixed income corporate bonds. We were talking, I think there's a great question coming up about exchange traded funds that are paying a pretty high dividend, if you will. So getting the capital appreciation in a group of stocks, whether it's Verizon, AT&T, a lot of the communication companies are paying a pretty high dividend, 8, 9%. So with the appreciation of the stock return and then also the fixed income allocation of that, I find that right now allocating into those fixed income streams for the bond dividends for the corporate bonds, then owning individual stocks. As far as actively trading, though, I think that you guys are looking for that real short-term volatility. I'm not sure. What's the average? How long do you guys typically hold your trades? How many day traders do we have? How many were like weekly, bi-weekly?
Oh, man, I think we got a pretty mixed crowd. Everybody, do me a favor. Type in your average trade hold. Like, how long are you guys holding your average trades out there? I know that some of you are doing mix where you're doing day trades as well as longer term, but what would you say your average is? I'd be kind of curious. That's a good question out there. Tillie, while they type that into chat, let me read this question here because I think it dovetails right into your talk about holding bonds and bond funds. The question came in from Sherry, and Sherry, thank you so much for the question. It says, my mother bought 50 shares of IRBT. For those who don't know, that's iRobot. It's been doing unbelievably well. Very, very good performance there. She says, with everything that's going on, it's up, and I've convinced her that she should sell it and buy something that will generate some income without the single stock exposure. When searching lower price ETFs, I came across Blackrock Multi-Sector Income Trust, ticker symbol is BIT. For the past 5 years, it has had a monthly dividend of at least 11.7 cents, i.e. a little over $400 a year for her. What are your thoughts on this one?
9 minutes.
What?
Oh, I'm sorry. I was reading the chat here that someone's holding the trade 9 minutes.
Naum's a 9-minute guy. So what are your thoughts on an ETF or something that might generate some income for her mom on this rotation of assets here? Are there any others that you might recommend?
So surprisingly enough, I have not done a ton of research on the actual dividend because when I'm investing in the ETF, I'm looking for the price appreciation from all the aggregate return of the stocks. And so I'm not real up to speed on the ETF returns, but I think, Merlin, you mentioned there was one you had in mind.
Say it again. What's that? I'm reading the chat too. You caught me to read the chat. What'd you ask me?
Yeah, it's really good.
So what was the question for me, Tillie?
The question is, which ETF did you find? Was it Shy?
Oh, you know what? Yeah. I here's the thing. I'm not a fan of buying an ETF from an income perspective. Like I'm trying to get both at the same time, which is why I told a lot of viewers I'm doing that with cryptocurrency, where I'll own cryptocurrency and get the hopefully appreciation in price there. Plus, I'm holding it at brokerage firms that will give me some of it at brokerage firms, which will pay me interest. And in this case, 8% per year or 6% per year for Bitcoin. That's not too bad. With regards to those ETFs out there, probably the safer bets would be hold things like TLT, SHY, but those aren't going to give you a higher yield. You could look at something like JNK, but again, now you're dealing with junk bonds or corporate debt in a much bigger basket. That's probably the way that I would go if you're looking for a higher yield. I personally am not that afraid of corporate debt, especially since the Fed has said that they're going to backstop pretty much all corporate debt. So you don't have to worry about them defaulting. Therefore, those bonds are going to do much better. And, are you going to get 8% yield like you are in that BIT fund? I don't know. Remember, the higher yield you're getting, the more risk you're taking. They wouldn't pay that high of a risk if they were very stable. So there's obviously a risk there at 8%, but I would personally stick with the big name ETFs like SHY, TLT, JNK. There's a few others. There's even some good real estate ETFs, which I think you might want to look at that could generate some nice income from dividends as well. But that's pretty much where I would go. All right, so the results of the little, I should have done a poll. I wonder if I can do polls in here. It seems to me, Tillie, like everyone's pretty much swing traders. I've got a couple days, 7 to 10 days, 2 days, 9 days, 3 days. And of course, you got Josh Lilquist, 1.3 weeks. I love the fact he's got his 1.3. Naum's at 9 days. Naum says 9 minutes, and then he says 9 months. Are you German, Naum? 9. What else we got? All right, cool. So that was pretty much it from the duration hold. Tom's kind of like me. I've got some holding, which is cryptos. He's got iron flies, an hour to 3 days per week. So mixed bag out there. What's yours, Tillie?
So it depends. I'm in a lot of long-term investments. I think you all guys know. So hey, full disclosure, I'm 47, almost 47 years old. And, I plan to be in the industry until I'm 100, if you will. So, in all my years of financial education, I think 100 is a good target. And so I've structured the portfolio so that there are a lot of long-term ladders. And then so as I age, then those ladders, some of them mature, and they're bond ladders and they're corporate bond ladders. So, you won't fall asleep because the rate of return is between 8 and 12% roughly. But I love having allocation where we know in either 6 months or a year, 2 years, 5 years, 10 years that those bonds are going to mature. And of course, when interest rates start to rise, I'll put the brakes on a lot of that stuff. But that's really along the holdings though. But as far as day trading, today I put an order on the S&P 500 to pull back to a level that's lower, but it's lower than today's open. So today I left the house about 8:30 Kansas City time, right on the open. By the time I got back, the market had already retested the morning low. And so to get on board that kind of trend, we have to be pretty aggressive. And so I did put some orders in. I haven't even checked to see if they got filled. Whenever I do get filled on a day trade, I'm actually looking to stay in the trade longer than a day, possibly a week. I'm looking to catch some of those moves that you guys see on those longer term charts, like the 240-minute chart, the hourly chart, in efforts to hold it as long as I can.
Mm-hmm. All right. You're all across the board. It's funny because when I met Tillie early on, Tillie was a Dow futures trader. That was it. She stuck with the Dow. We called her 10-tick Tillie. That was actually, I didn't call it. That was just her nickname, was 10-tick Tillie. And then moved on to S&P, Russell, and now you trade just about everything. And you're studying. You told me that part of the reason that you can't do the market outlook every weekend is because you're studying. What, pray tell, what are you studying?
So, full disclosure, I am doing what I need to do in the industry so that if I want to go out and approach companies, you know, for example, people who work in a lot of industries do not have retirement plans. So, you know, for example, you guys, I go to a lot of cosmetic places, right? Med spas and hair salons and all the girly stuff. But hey, I got my husband who works in the car business. So you got, you know, automobile specialty, they rebuild motors. So there's so many people that we know, landscaping companies, cooks, you know, that are owning restaurants, they happen to be the cook as well. And I know so many people that do not have a retirement plan. And boy, I mean, you guys, you know, I'm all about having some type of retirement plan. If we want to actively trade it, that's great. But, you know, how many people in the industry, in any industry, can you think of that don't have a retirement plan? So I'm doing what I have to do with FINRA to get my designation so that I can approach those businesses and educate them and help sponsor their plans. And then those people that want to be real active, I'll be happy to send them to Online Trading Academy to get an education.
There you go. All right. Well, good for you. Years ago, I was told that I needed to get some certification, so I got my Series 63, and it was funny because you get all these licenses, and what I found out early on, for me anyway, was I always wanted to be an active trader. So I love day trading. I love the short-term side of it. You know that if you get a Series 7 and somebody's got a license, you're now deemed to be a professional, right? That's what you... So all of a sudden, when you say you're a professional, your fees, your costs go up exponentially. I believe the data fee just for Dow it's 10 times higher for a professional versus a retail. So as soon as I went down that path and I got my 63, I think it was 63, and they're like, okay, once you get your 7 and all these other ones, I went, hold on a second. I now have to call myself a professional? First off, I don't want to get that egotistical and call myself a professional. I just like to be good at what I do, but I couldn't do it. So hats off to you for going down that route to get all those licenses and be the professional.
Thank you, Marlon. And yes, I am avoiding any red flags that would red flag me as anything that would cause any compliance violations in the industry as far as me being an educator. So it's very hard to work in this industry and be able to actually teach trading and then go out there and offer and encourage people to open up a retirement plan, because to do that, that's considered advice. So FINRA does have a few exams that are required for that, but I do not have to carry that brand label of a Series 6 or a Series 60 whatever. I don't have to really carry that label because there are ways in the industry to be able to offer retirement plans and things without, you know, causing that big red flag of, well, you know, I'm a professional, and then causing a lot of other conflicts with my interests as well.
Well, when I win that lotto and I just don't want to do it anymore, I'll give you my money and you can manage mine for me. I've known Tillie for many years and a trustworthy soul, so I hope that all works out for you. Let me go to some more listener questions here because I want to dive into these. And then, of course, if you guys have questions, feel free to type them on into the chat. This is one from Koja, who's with us today. It says, we always hear about conservative portfolio and aggressive portfolio. What's the difference? And is there a good website that can help with to provide ready portfolios? This is a loaded question here.
Wow, how many questions were there?
Well, it's a tricky one because, you know, if you go back to the 1950s, it was easy. This is conservative portfolio, this is aggressive portfolio. But, you know, nowadays you can't make that statement because there is no cookie cutter approach anymore, Tillie. They have to be tailored to the person.
Yep, exactly. So when someone says aggressive, that usually means stock exposure with the volatility of the stock market, as if they don't know how to protect their investments. So that word aggressive typically means stock allocation.
Yes. Oh, you froze.
Much.
No, your video froze. Keep going. Sorry, for some reason your video froze.
Yeah. Okay, so did you guys catch that? Aggressive stock allocation. So someone could go up to 80% stock allocation if they're quote aggressive. Mm-hmm. If someone wants to be ultra conservative or even conservative, that means bonds. And depending on someone's income and if they want to be conservative and not take on stock exposure, they could increase their bond allocation up to 80%. But we very well know that their rate of return is going to be much, much lower, depending on what kind of treasury bonds and things they have.
Mm-hmm. Yeah, Don says, which portfolio has GME in it? That's a good one, Don. Yes, I'd like to make a portfolio which has Virgin Galactic. I'd like to have some GameStop, maybe a sprinkling of AMC, and throw all that really risky short squeeze stuff in there. The tricky part for it is this, Koja. A risky portfolio to Tillie might be completely different than a risky portfolio to me because we have different risk tolerances. Now, in general, there's a simple math formula that the industry loves to use, and that's basically you take your age and you subtract it from 100. And whatever that number is, that's the percent that you should be in equities. So if you're 20 years old, you take 100 minus 20, that's 80. That means you should be 80% in stocks, 20% in bonds. But let's be honest, if you're 20 years old, should you be in bonds at all? I'm going to say no. But it's just some legacy financial advisor tool that they've used over the years. So if you're 80, you should be 20% stocks and 80% bonds. Is that true? Right? Again, if I have a big portfolio, it's designed to achieve an objective, whether that's generating income or it's going to be growing for me. And I need to figure out exactly what those allocations are, which is why I love the proactive investor class. A nice shill for our class at OTA. But the proactive investor class is all about that. It's saying, look, what is your goal? Or is it to make money for college so you can pay through your way through college? Is it to buy a new home? Is it retirement? Okay, great. Here's your target amount to have in that portfolio. And once you get to that point, how do I figure out exactly what to put it in so I can get that revenue stream or income stream from that portfolio that I desire? That, to me, is what dictates your aggressive versus conservative. And yes, as Tillie pointed out, your conservative stuff is going to be in very low yielding, but yielding assets like, treasuries, right? Get very little income, but it's safe. Aggressive is going to be your straight equities. Get you in an all tech fund out there, or get you in the short squeeze fund, which is, it's probably going to be a short squeeze. Yeah, Tom just said it right there. I'm looking for the Reddit 3 times leveraged ETF. You say that, Tom, but you know what? Someone's going to create that damn thing. All right, so I think, Coach, we've answered that one. That's the basics of the aggressive versus conservative portfolio. Tillie, what else is going on in your world? I know that you're probably overly excited for the Super Bowl coming up this weekend, as I am. Only reason I'm cheering for your team is because I hate Tom Brady. I cannot wait to watch him lose. Just the fact he's there. You got classes coming up. What else is on your list?
Yes, we have class coming up this Saturday, but you guys are going to love this. So we have a little condo vacation home in St. Petersburg, Florida. So I'm just saying, it's going to be kind of funny to watch the Chiefs and the Buccaneers. I'm just happy that the Buccaneers are going to the Super Bowl. That's amazing. I mean, the fact that they have to play us and, probably going to lose, hey. But, I lived in Tampa for a long time. I love Tampa. We have a place in St. Pete. And to actually see the Buccaneers get to go to the Super Bowl, that is amazing. I'm so happy for the team, aside from all the favorites or non-favorites, Merlin.
Hater. I hate him.
I'm excited about that. Got classes coming up. And, yeah, Super Bowl Sunday is going to be a great day. I think there's a stock out there called, Jack X. Have you guys ever heard of the stock called Jack X? I had a friend asking me about it.
I haven't. I mean, but I
can't Facebook or chat any opinion about a stock because that's a big compliance no-no in a lot of the world that we're in. And so as an educator, I have to be very careful with that. And then, but have you guys ever heard of it, Jack X?
No.
Yeah, I have to get the ticker symbol. I have to look it up next time.
Jack X, huh?
Yeah. I was going to my phone, and where my phone is.
No worries. I was actually just trying to bring it up. I don't see Jack X stock. Huh. All right. There's Jack, which would just be Jack in the Box, but...
Let me check real quick.
Check your phone real quick.
Yeah. Because I told my friend, I said, with compliance in our industry, I don't really, text chat about my opinion on anything.
Oh God! See, I went down the sports. I went down the sports rabbit hole. Tom, me and Don Fron are gonna be cheering on Kansas City. The reason why is because the greatest quarterback of all time is not Tom Brady. It's Joe Montana. Period. Joe Montana went to the Super Bowl, and every time he went to the Super Bowl, every time he went, he won. Tom Brady went more times, but he lost a whole bunch of them. Yeah. Plus, Bill Belichick and the whole cheating organization of the New England Patriots. Now I'm really going to start to get people to hate me out there. Right now, Belichick is nothing without Brady. He's still a great coach, but You don't have Brady in there. I mean, it's not going to happen. So, yeah, come on, the young guns. I want to see Tyreek Hill get like 1,000 yards in a game. Bring it on. Oh, Big Eb. I'm going to block Big Eb now. Montana. Montana. Are you kidding? Greatest show ever. Great guy. All right, so what was the ticker symbol, Tillie?
It's JAGX.
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 Oh, I mean, this is pretty much what we've been talking about, which is the crazy. I mean, look, what's my thought on it? Stay away from it. Stay away from it. Why would you want to? I mean, it's moved up so far, so much. Could this thing go to $10 or $100? Yeah, but again, for those that want to make it as a long-term trader, meaning you can trade for the rest of your life, you don't want to trade stuff like this. This is one of those ones that in one bad trade will erase it. So I'm not a big fan of just the price chart of it. It's actually a big bullish flag, but that flag is drooping and drooping and drooping. So I'm not a fan of Jaguar Healthcare. Sorry, just from a technical perspective. I don't know what they do fundamentally.
So I personally would see this as a value investing opportunity for someone who wanted to do allocation, but usually unless it gets over $10 a share, we wouldn't expect for any big institutional money flow to come in. So usually if we put an alert at like $10 a share, and then once it trades above that, but someone who's in love with this company, my friend, if he's done his research, if he truly believes in this company, and he wanted to start averaging in at a very, very low price, with a very, very small allocation, a very small percentage for a long-term investment, I think that's more of his perspective. So I haven't done any research either, but do you guys know of any of the cannabis companies in the healthcare space that are doing research to find out how to use cannabis in different aspects of physical therapy, mental health, things like that? Are you guys familiar with any of that?
Sure. Well, I mean, look, healthcare is great, and someone's now brought up, Tenet Healthcare. You got a lot of this stuff that's up significantly, and this is like, if you look at THC, that's a chart that I'd be happy to invest in. That looks like stable growth. That looks like things. Obviously, it's moved up a lot, but JAGX looks, a bit aggressive to me. I don't know. And Vasily says, look at CATB, CATB, Tillie. This is the same basic pattern we've seen with these pump and dumps, right? And just for every viewer out there that's new to this program, I don't trade biotechs or pharmaceuticals. I am blacklisted, self-imposed blacklist. It's on my trading plan. I am not allowed to trade biotechs or pharmaceuticals because of this stuff right here. On Friday it went from $1.50 to $8. Yeah, I don't touch it, and if anything, I'd be okay buying it as it came back and closed that gap because the trend since November looks great. But no, not my cup of tea. Too risky for me.
I know, it makes me want to sing that song. Dun, 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 can't touch this. So officially, guys, I do sing in class. Have a great time. But yeah, we start singing that. What is that? MC Hammer, Can't Touch This.
Yeah, I like that. We're gonna karaoke nights. Karaoke show is usually on Fridays, Tillie. So you might have you back on a weekend show.
Yeah, but yeah, we all know that you had a ton of how do we say this? Episodes. What was that? When did those start? Was that in the 90s on the trade floor when those started, or was it like in the 2000s when where you were? Because I remember that you still traded some of those biotechs.
Oh yeah, I traded some when I went to Italy in 2001. I was still trading biotechs, and what happened was I got on an airplane. I was short a biotech company, and when I landed, it had like an 80% gap up, and completely wiped out my position. And from that moment on, I'm like, nope, I'm done. I'm not trading biotechs ever again. And it's funny because I looked at the fundamentals. I don't even remember the company's name, guys. I don't think they're around anymore. But I looked at the fundamentals, and this company was bleeding money. I mean, it was just hemorrhaging every quarter. It reports worse and worse earnings. I'm like, this company's going down, right? Short it. Yeah. One announcement, and it just shot up and absolutely killed me. All right, what else we got? CRPB for Visanti. I know we're just doing the all request show. CRPB, CRBP. Boy, you got more drug stocks. Look, everyone wants. We got a bunch of drug addicts in this room today. But I'm dumb.
No, hey, silver does have some selling up there at $3 a share, though. I think everybody was. What were the two questions on silver?
Yeah. Oh, Brendan's been, our silver bug in the program. He's been, and I've been bullish on it as well. But I sold out of my Pan American silver, so Brendan's doing very good on his silver stuff. But yeah, I'll bring up real quick. Let me talk about Corbus Pharma for Visali. look, this one, I'm not touching $2 stocks. It's just I just don't do it. But Corbus Pharmaceutical, it looks much better than the previous one we just looked at because it hasn't had the great crazy breakout. It's just making higher highs, higher lows. So all in all, uptrend, it looks fine. But to me, that's a risky one. I really wouldn't touch it. Yes, Brendan, short sellers are bleeding money. That was a long time ago for me. I still am a short seller. Here's your silver chart. And so let's go into this Silver Tillie. Woo, got that one untangled today. What's your take on silver now?
I think it's going to be interesting up there at $31, $32 a share.
Yeah, futures ripped through. I think that you get a close above 30, then you're looking at a much bigger run. But most of this move I think is done by this Wall Street bets thing. My guess is you'll probably see it come back down a little bit, just like some of these other pumped stocks have done. But long term, I'm still long-term bullish on silver.
Yeah, it could very well pull back to that 27, 26 area.
Yeah. There's your monthly chart of it, guys. You can see it's actually kind of forming a double top right now at $30 on that monthly. We can go to a weekly as well, and you'll see it's pretty much got that double top formation. So a close above 30 tells me we're probably going to get that next leg to the upside. If it doesn't, then you might have some shorting opportunities to drop it back down into that mid-20s, mid to high 20s. All right. Cool. I think that's going to do it for me. Yes, Alex, just because I know you love to gloat on this one, but you've done very well on this one. Where you can take profits, my friend. He's in GEVO. This one's just done remarkably well. GEVO. I still probably wouldn't buy myself right here just because. All right, Tillie. So upcoming classes for you. Anything to come up?
We start class this Saturday. And also, though, I'm super excited because all of a sudden there's a lot more here in Kansas City. They're attending workshops, so I'm excited about that because I having the opportunity to educate people in this industry is so much fun, amazing. It's really a life changer, and to have this thinking pandemic and other terrible things impact Online Trading Academy, that was extremely sad experience, and so now I think people are a little more confident for whatever reason. That all of a sudden in the past few weeks, we have a lot more enrollments and registrations, so I'm super excited about that.
Nice.
And I'm happy that you guys are all here on the show sharing your activity, and obviously you guys have a lot more experience with risk management, and I see a few friendly names there as well, so that's always fun to see you guys.
You've got some Kansas City peeps in the crowd with you, Tillie.
Awesome.
Yeah, absolutely. All right, Tillie. Well, hey, thank you so much. Have fun on class this week, and I can't believe you're having a class over Super Bowl weekend. I'm sure Sunday class will be very entertaining, but...
Yeah, we wrap up about 3 o'clock Kansas City time. The Super Bowl's at 5:30, so that's just enough time to get home, get the popcorn going, and have a great time. And then after we win the Super Bowl, you're just going to have an amazing weekend class because everyone's going to be like Kansas City crazy.
Yeah, the Monday hangover. That's going to be a great class on Monday if you win.
Yeah. It's great.
All right, Tillie. Hey,
right after a Super Bowl win.
That's right. Well, hey, I'm cheering for you. Good luck this weekend, and thanks for coming on. We'll have you back on soon.
Great.
All right,
bye, guys.
Bye. Guys, that was Tillie Allison-Harris giving us some insights into her perspectives of the markets right now and kind of what she thinks is going on with the grand scheme of things. Also, the trap perspective. We had some investing pieces out there as well. No, Tillie does not own the Kansas City franchise. She's just been working there for many, many years. So, what else we got? Elon Musk said he thought it would be ironic and awesome if Dogecoin... Yeah, I'm with you on this, Brendan, but Dogecoin, my thoughts on Dogecoin, even the guy who started it said it was a joke. The guy who created it said it was an absolute joke to show how simple it was to create these things. So I am not a fan of it. I won't buy it. I have owned it in the past when I first got into it. But watching people pump and dump right now is pretty crazy. It is nuts watching these pump and dump moves. I don't know if you guys saw Ripple today, but Ripple was up huge today. I can't bring it up on trade. Oh, maybe I can. I don't know let me see if I can bring it up here real quick on TradeStation. I usually never bring up cryptos on TradeStation, but there's a reason. It's because I can't. All right, let me see if I can bring it up here on my TradingView, just to give you guys an idea of what it did today. It was funny because one of those ones I woke up and looked at my crypto, looking at my portfolios, and I pulled up the Ripple chart and I was like, "Whoa, are you kidding me? This is nuts." Coin market cap. There we go. All right, so let me bring that one on over for you guys. And here is coin market cap. We can scroll through here. Wall Street Bets. There's a Wall Street Bets coin. Can you believe this crap? I'm not joking right now. There's literally a Wall Street Bets coin that's up 1,100% in 7 days. It has a market cap. There's no way this thing has a market cap of $24 billion for WSB. Something is fundamentally wrong in America when that's the case. That is absolutely ridiculous. Anyway, we'll scroll down the list here, look at XRP, which is still up, was it 37%? I wanted you to see the chart of this one, though, because its daily chart was absolutely ridiculous. There's your daily. Started off 24 hours ago at about 50 cents, 40 cents. It rallied all the way up to high about 75, and now it's presently trading back down at 37. So huge, almost pump and dump out there for Ripple today. So it's unfortunate that my Ripple is still sitting at Coinbase. I never moved it, and you can't trade it over there. I cannot trade it over there. It's pretty funny. All right, what else do I got from you guys before I wrap up and show you? Merlin, I will concede that the primary driver of a cryptocurrency value is not the same as a percentage box. Yes. And if we start seeing more adoption from Doge, who knows? It might actually become mainstream, but it's not for me. Not going to do it. Larry says, my wife is asking, why didn't you use a stop loss? On which one? On the biotech, Larry? You asking about the biotech thing? Oh, that's a great question. On a specific, oops, we don't know less. I'll read Les's here in just a second, now that it's up on my screen. But yeah, if you're asking about the biotech, let me know, and I'll clarify that one. All right, I got a couple questions to get to. There was one on here, which it was this guy. Yes, this one from Les. It says, if I place a vertical debit spread, let's say at 95.90, my max loss should be $500 premium received. No, that's not the 500 premium received. It's the 5 points. The difference between the 95 and the 90, that's 5 points, times 100 shares. So that would be $500 for that. The premium received is different. All right, if you get receiving premium, but that's your maximum loss on this. In that case, would be $500. So I don't know. You can't have a greater loss, from my understanding, than that. I've never had a greater loss than the maximum on that. All right, let's see. Okay, yeah, on the plane. So it's a great question. So I think if I remember something, it was like I forget the exact price of the stock. It was like a $20 stock, and it gapped up like next day like $36, right? So even if I had, let's say I shorted the stock at 20, and I have a stop loss at 21, right? And it's 1,000 shares. So I'm risking how much? 1,000 shares. I'm risking $1,000. So what happens is the equity markets close. So it closed, let's say, at 21 or $20, right? Still hasn't hit my stop loss. But the next day it opened at $36. Yet my stop loss is 21. What price am I going to get filled at? Because you have the stop loss in the system at $21, your thought says, I'm going to get filled at $21. No, you're not. That was the trigger for it. When it was actually executed, it filled me up here, right there. It filled me all the way up at 38. So I didn't have a $1 stop loss in that case. I actually had a $38 or $36 stop loss. That's the difficulty of gaps. So as soon as that thing gapped up like that, there was nothing you could do. Even if you put a stop, no matter what your stop loss price was, it wouldn't have hit until it traded at the open on that next morning, and that's what happened. And I didn't have a stop loss on it anyway. But if I did, it still wouldn't make a difference. Wouldn't have made a difference. I would have gotten out on the opening of the next day. That's what happens. Yep. That's what I thought. I mean, it's not what I thought. It's what I know, Don. I know that the maximum there, but I'm curious, Les, did you lose more than that? I'm wondering if somehow maybe your spread got peeled off, meaning they closed one side of it and let the other one run. I don't see that happening. If they're open as a spread, you got to close them as a spread. So, yeah, I don't know. All right, what time is it? We're an hour already. Let me show you economic calendar here, and then we'll go into a wrap up. Tomorrow is a big day. Obviously, today we didn't have too big of names. There are a couple out there reported earnings, but nothing that's really noteworthy. Tomorrow, though, is an awesome day with regards to earnings. Be very careful. I guess I could throw the graphic up here that I like to use, my little popcorn trade of the day. Your popcorn trade of the day. Yep, that's right. Got to have some cheesy graphics because I'm starting my own broadcasting company. Amazon will report earnings tomorrow. They are going to be reporting after the market close. So is Google and their second ticker symbol, GOOG, as well as GOGL. They all three will be reporting after market close tomorrow. Now, before market opens, setting the tone for tomorrow will be Alibaba, ExxonMobil, BP, Pfizer, and there are several others that will be reporting earnings tomorrow, but these are just the cherry-picked ones, the big names. Now, as far as the economic front, guys, everything that came out today was pretty much in line with expectation. I like the construction number and the manufacturing numbers from Europe. They're all pretty decent. We still have the Japanese number coming out tonight, meaning their central bank will be meeting, and there's supposed to be a rate announcement. I don't expect any change there, so I decided to just leave that one off, but that will happen today. Now, if you look at tomorrow's economic calendar, there is some nice stuff for tomorrow. The U.S. is actually unusually quiet. You have the IB tip economic optimism. You also have Ward's total vehicle sales, which no big deal there. Now, if you look through here, you can also see we have some GDP numbers coming out for the European Union. Later on in the evening, you have building approvals from Australia, but not a ton. Really, the major stuff is, I wouldn't even call it major stuff. Just the GDP numbers for Europe, I think, might impact you if you're trading the euro because they're expecting some pretty significant changes there. All right, that's going to do it for me for tomorrow. For tomorrow's show, we'll change paces here. We're going to talk about Forex. It's going to be a 100% currency day. I'm going to have Walker Englund on the program. If you guys don't know, you can check him out on YouTube. I believe it's Walker Texas Trader. He's got all kinds of great content out there. He does something almost every single day free for the community, webinars and all kinds of stuff. He's going to be joining me. We'll talk about the global currency markets. If you have a specific currency pair or something you want us to analyze, let us know what it is. I'm sure the dollar will come up, as that's been a hot topic for the markets lately and for this group here, but I'll get his take on it as well. If you guys have something you want us to cover specifically, you can send that on in at TraderMerlin.com or just email me, TraderMerlin@gmail.com. You can send that in 24 hours a day, 7 days a week, so I can alert me and wake me up in the middle of the night, but that's fine. As for those of you who sent them in at 2 a.m., you know who you are. Anyway, that will do it for me, everybody. We'll see you tomorrow with Walker Englund. Have a great day out there. Be careful with Amazon and Google. We'll see you tomorrow. Take care.